Hey everybody, welcome to this free edition of our Trader Use Group weekly roundup for the trading weekend in June 7th, 2024. I'm Preston Brent, and thanks for tuning in. Well, the theme this week is half full or half empty. Talking about the markets, of course. Let's take a look at what we've done this past week and where I think we can be heading as we go into the next quarter. If we look at the week, you can see that the only one in the red, both weekly and year to date, is small cap. All right. The index has mostly ended higher. We did see new records made in the S&P and NASDAQ. In fact, the S&P's had 25 record closes so far this year. But we did have a nice move today in a couple of key areas, primarily in technology. You can see that we had some conflicting data as well this week, the economic data. You know, at the start of the week, it had some downbeat economic data around the ISM and the management side, Institute of Supply Management, right? It came in at 48.7. Remember, anything below 50 is considered contraction. So that kind of got the markets going. And then we had jobs data coming out that really surprised the market towards the end of the week to the high side. In fact, we saw that 272,000 jobs came in May. That's well above consensus expectations. In fact, we did see unemployment rise too. So kind of conflicting data, but you know, they grab those data points from two different data sources, the government does. But either way, it's the highest level of unemployment since January of 2022. But even as the unemployment rate increased, we did get an increase in average hourly earnings as well. So that alone moved the 10-year yields higher, believing that the markets or the Feds, you know, pushing back where they may do their rate cut. If you look at the PE ratios, very rich, even on a go-forward basis of 12 months of 21.72. Okay. Dividend yield still 1.36, 10-year Treasury 4.43 for the year. Earnings yield 4.5%, a little over 4.5%. The VIX did come in a little bit this week at a very low 12.22. All right, I think we're going to have volatility stay a little bit higher than normal. I don't think it's going to go much lower than that. Members for our Sunday session tomorrow evening, I'll go in a little bit more detail on what we can see and what we can expect next week with the Feds. Okay, but you can see where the best performer for the week, as I said, was technology, a little over 2.5%. Worst sector for the week was utilities. Now it was leaning the way last week, over 15% year to date, but it fell out of first place. Communication services jumped in to lead the U.S. sector performance for the year at 16.46. Real estate still bringing up the rear, a little over 4.5%. Okay. And of course, if we look at the European markets, you can see here mostly in the green. I mean, the FTSE in London was the only one down, just barely 36 basis points, but everybody in the green year to date, everybody healthy. And we did see the ECB, they reduced their deposit rate by a quarter point, 25 bips to 3.75. Now, that was a widely telegraphed move, but I don't know if they're going to be doing any cuts after that for the time being. And they did revise their forecast in 2024. They revised it up to 2.5% inflation from 2.3%. So I think they just put that rate cut in there because they had forecasted it a couple of months ago and kept talking about it, and they didn't want to renege on it. So that's what they did. They also revised their average inflation for 2025 to 2.2% rather from 2%. So they've essentially raised their inflation forecast through 2025. Okay, but you can see they're fairly steady for the week, year to date in the green, everybody, including the FTSE. Then, of course, if you go to the Asian markets, you can see Japan, their latest PMI data, it showed that the country's service sector continued to expand. And there were some signs that private consumption is going to slowly stop being a drag on growth over there. We did get increase in household spending. That was the first increase in 14 months. So let's see if that starts to establish a trend in consumer spending. Meanwhile, the BOJ, the Bank of Japan, is pretty much expected to keep interest rates unchanged at their June meeting. All right, so we're starting to get these rate cuts around here. We did see this past Wednesday, Bank of Canada cut their rates by 25 basis points. We did see, as I said, the ECB cutting their rates by 25 basis points. We get our Fed up next week, Tuesday and Wednesday. Wednesday is when they announce, but they're not going to cut their rates. And then on June 20th, we get the Bank of England. They're probably going to cut their rates 25 bips. So the global central banks have officially started their first round of rate cuts. The Feds will probably be, in a rare way, not following the rest of the central banks, but are leading the central banks. They're going to be following them. But that's kind of what we're seeing there. Japan is still putting stimulus in their economy, just like China. China and Japan are the only few major global economies that are putting money into the economy rather than taking it out. China, we did see the housing market start to find a bottom. I mean, they do this survey every month of 100 top developers over there. We saw where sales there rose 11.5% in May, right? Excuse me. So that's a good sign. New home sales slumped a little bit in the prior months, but hopefully we can start to find a bottom here, at least for China. Hopefully they can start to find a bottom. Hang on just one second, guys. I gotta find my cursor here. Let's see. Here we go. Here, where am I? Okay, hang on one second, guys. I had something in my throat. I had to clear it out. So anyway, over in China, as you can see, their weekly performance here in the red, but year to date, they're in the green, just like the Nikkei and the Hang Seng. And they're all in the green. So hopefully we can see them starting to round out the bottom there from an economic perspective. We did see Chinese exports rise a better than expected 7.6%. So that means Europe and the US are still spending money, and China is still shipping stuff to them and to the US. Okay. Although imports, the Chinese consumer is still not spending money. Imports decreased, weaker than what they had forecast. So it's still slowing. Okay. So we'll see how that pans itself out. What I want to do really is I'm going to go over, let's just show you a quick trip of some of the major markets and just kind of show you what I'm seeing on my screen here on the chart action. So what you're going to see here is the E-mini S&P 500 futures. And you can see my target here for the E-mini was right at about 54.11. We actually came up and hit 53.85. And this was on June 7th, on Friday. So we made new all-time highs, just slightly south of the southern end of my target, which is around 5,400. All right. There's going to be a lot of resistance at this level, and it is an Elliott Wave 5. Typically, after an Elliott Wave 5, you get kind of a choppy ABC pattern. You can see a little bit of a potential bearish divergence setting up here. This would suggest that the last couple of weeks of June, we're going to see some downside move, and we're going to see some elevation and volatility. In fact, that's what I've been telling our members. Leading up to the Fed meeting, we'll probably have, the markets will glide or slide or grind higher. And then after the meeting, through the end of June into early July, with a big holiday here in the U.S., our July the 4th Independence Day celebrations, we'll see the market slide lower, and then we should see it rebound back up with buyers coming back in again. Okay, members, I'll go through that in more detail with you our Sunday evening weekly market, roundup. But this is what I'm seeing here. So what does that mean? That means that we got a lot of support down here at about 52.35 to 52.50. All right. So that's about 100 points south of here. So I would not be surprised to see the market slide south 100 to 150 points in the last couple of 2 or 3 weeks of June. All right. So I'm still seeing a little bit of a bullish action through the middle of June and a little bit of a pullback here. So do not be surprised if we get that. Now, the TV talking heads will be on there saying all doom and gloom and the market's going to be crashing, but I do not think so. All right. This is just a momentary blip. I think the lows that we made in the middle of April 19th exactly, I don't think we're going to take those out, but we could see a challenge to the 50 EMA, which is sitting right around 52.31 right now. Okay. If we come in here and we look at the Dow, you can see the Dow almost went into the red here. The end of May, going into early June, and then it's having a hard time getting back over the 50 EMA. Okay, so that's not good. The Dow futures underneath the 50 EMA. All right, the S&P over the 50 EMA, and if we look at the Russell, which is the worst performer, small cap. Remember, I told you small cap was down 2.1% for the week. It's in the red year to date. As you can see here, this is the demarcation between in the green or in the red for the year. So as of June 7th, the small cap is in the red. Now, we haven't had this big of a lag in performance between small cap and large cap in quite some time. Normally, when you've got higher interest rates, small caps suffer. And when interest rates are coming down, small cap starts to do much better. So this does not portend good news for the interest rate regime in 2024 for the markets. The other thing it could be showing is small cap tends to lead the way down at the top of a bull market and up at the bottom of a bear market. Well, we've been in a bull market since October of 22 when we hit the lows, and we've moved up in excess of 25% with most major indexes, but the small cap's not participating. So this could be an ominous sign, right? So just understand what we're seeing here in these markets, what I'm seeing in these charts. And then, of course, if we look at NASDAQ, you can see here NASDAQ, just like the S&P, it made new all-time highs on Friday, up intraday 12.65%. And you can see well north of the 50 EMA. In fact, on May 31st, you can see that long tail in that candle. We touched the 50 EMA, and then it just bounced hard up. Buyers came in. We were down 18,259, and now we're at 19,155. So we're up almost 1,000 points in just a few days, right? In less than about a week's time, maybe not quite a week's time, 8 days, yeah, just up strong. Okay, I mean that's kind of where we are, just slightly less than 1,000 points. So a really strong rebound. I think we're going to run sideways. The S&P will probably glide sideways, maybe up until we get the Fed meeting on Wednesday. It's when they do their press conference. So it'll be real interesting to see how that shakes off. Now, just understand that in the S&P, it's the first time this has happened. We've got 3 stocks, Microsoft, Nvidia, and Apple, that run over 20% of the value of the S&P. Okay, we haven't had that before. Normally, we've seen 10 to 15% in prior big bull markets. You generally have a couple of stocks that'll pretty much run the index, but we've never seen 3 companies control over 20% of the S&P like this. So it's a good news, bad news side. If you want to see what the markets are doing, just tune into Microsoft, Nvidia, and Apple. And if those guys are down, then it's going to be hard for the S&P to stay higher. Right. So just keep that in mind as we're moving forward. And of course, if we come down here and look at the bond market, hard down day. It was down 1.31. Look at that down day, all the way down almost to the 50 EMA. And that was due to the really strong jobs data that we got out on Friday. That puts a lot of pressure on the Feds not to cut rates right now. Even though unemployment moved up to 4%, we had 272,000 jobs. So that's what, and that move interest rates higher as well. So we've got to really watch this very closely to see how this thing is going to shake itself out. The other thing that I want to focus your attention to is the currency market. If you look at the dollar here, now the dollar reacted because we had the Bank of England right? The ECB, they cut their rates by 25 basis points. The Feds aren't cutting their rates anytime soon, so the disparity between, or the divergence between the euro, disparity, the divergence between the dollar and the euro is going to grow wider. So you can see the dollar strong on Friday with that strong data. And then, of course, if we come over and look at the euro, you can see the euro was just the opposite. It came down pretty hard, right? The euro broke the 50 EMA to the downside. So we've got to watch this very closely. Right now, we're still in that area where good news is bad news for price action, and bad economic news is good news for price action. So we're in one of those kind of weird, strange spots right now. Okay. And then, of course, if we look at the Bank of Japan, as you guys know, I love being long the yen. Staying down at these levels down here, the risk of a downside move is very low. Upside is a lot higher. Members, we'll go into our review again, different ways to trade the yen to the upside. And a couple of other favorite trades that I have. If we look at gold, gold got crushed. In fact, all precious metals got crushed on Friday. Look at this. Gold was down almost 80 points on Friday. It took out its 50 EMA. I've been saying gold is going to come down and fill this gap down here at 2250. Once it gets down in this area here, it'll be interesting as a possible buy. But right here we had a very strong bearish divergence signal, and the signal with gold was back on the end of May to start taking your profits and getting out, or just picking up puts. And then, we had a little bit of a move higher, but this was just kind of a false move, and then we gave it all up. Same thing with silver. Silver did the same thing. Right here, it went beyond my target. It actually made these highs here. We did not have a divergence right here. We almost had a divergence here, not quite. But once it blew below my target, then I think the 50 EMA is a nice spot for silver as well. Okay. And then, of course, if we look at energy, if we look at oil, OPEC has been cutting their oil forecast, right? I think on last Sunday, they agreed to extend their production cuts in 25. They want to limit supply and keep a floor on prices. So they're cutting a good deal every day. Their cuts amount to about 5.7% of global crude supply. And they're doing like about 2.2 million barrel or cuts a day. But that's still, it's going to put some upward pressure on oil. But because oil has moved down like this so far, just barely staying in the green for the year. This is the demarcation between red and green for the year for oil. This is also starting to show that, maybe we're having a stronger global economic slowdown than people are perceiving. So we got to tread very carefully in the second half of this year. I know everybody's really bullish on AI, but we got to be very careful. And then nat gas, my other favorite commodity long, right? I love this thing. Down in this area down here, I was screaming at the temple to go long nat gas. I said the downside risk is very low. Upside, nothing but upside, right? And if you do downside, very minor, and you could weather the storm. And here we go. Members, I'll go into different ways to trade this, but just again, really interesting play. Now, I would not chase this up at this level. Can it go higher? Yes. But the trade was down at this level here. Any pullback and dip, I would look at buying. We got a cross in the 50 and the 200. And typically where market action crosses on the 50 and 200 tends to end up being longer term support, which is sitting at about 2.3 in the nat gas market. Okay. So that's a little bit about what I'm seeing in some of the major markets, everybody. Otherwise, I will see you guys next Saturday for our next update. Members, I will see you Sunday evening. We'll spend more time on some key sectors and some stocks and some opportunities here with the Feds coming up. And we'll take a look at volatility as well. Otherwise, have a great weekend, everybody. Members, I'll see you tomorrow evening. Ciao, folks.